Just when MusclePharm had profitability on its mind, it gets slammed back down to face its historical reality. So just as I've done in some of the previous pieces of content around MusclePharm, I just want to kind of broadcast a few disclosures right off the bat. The first is that I did work for the brand about a decade ago during the hyper growth kind of golden years of MusclePharm. And that could create some inherent subconscious biases. And then additionally, I've had a post-employment consulting relationship with MusclePharm, and that has NDA implications attached to it. But to circumvent this, I'm going to be staying very true to the publicly disclosed information. And because of that, you might not hear as much of kind of the strategic commentary that you're used to, but I hope that won't make you click off of this piece of content early, because I do think there's going to be a ton of valuable information that I still will be able to provide. So let's just kind of jump into some high-level financial data. So for the 2021 Q2 earnings, I did take a look at MusclePharm's 10Q document that was submitted to the SEC. I also reviewed their earnings call and any of their kind of press releases or publicly disclosed information that any of the leadership had provided over the last 3 months. But for 2021 Q2, MusclePharm had net sales of $14.9 million. Now that was down 12% year over year, but it actually was up 12% on a quarter-over-quarter sequential basis. Now, if we break this out from this particular quarter from domestic and international, domestic made up 61% of the sales, and the domestic sales were down 33% year over year. Now, internationally, MusclePharm did a lot better this quarter internationally, with those sales being up 68% year over year. Now, looking at the Q2 of 2020, that was a terrible quarter for international distribution. And because of that, those comps are a little bit misleading, probably to historical sales numbers internationally for MusclePharm. Looking at just the sales by kind of key customers or key customer risk that MusclePharm has, if you are a publicly traded company, you have to kind of disclose if any of your key customers, your retail customers, make up any more than 10% of your sales. MusclePharm used to break out the exact customers that were above that 10%, but now just kind of call out the number. And MusclePharm in this quarter had 2 retail partners that each made up over 10% of their revenue. And while they don't break out those customer names, my assumption, if they are the same in which they were at the 2020 year when they did break these things out, those customers would be Costco and Amazon. Now, looking at their sales by just channel, and MusclePharm does a little bit kind of weird things with their channels because they should have a few more categories. I think Amazon's within their specialty category, but specialty made up 67% of sales this quarter. Food, drug, mass made up 21% of their sales, and then international made up 12% of their sales. Now, you might be thinking, you just said that international made up 31%, and now you're saying it made up 12%. Honestly, I'm not exactly sure from an accounting standpoint why those numbers don't tie back. My assumption is that there is an international e-commerce player or 2 or 3 that somehow get thrown into another bucket, and just the international master distributor kind of traditional relationships get thrown into this international number. Now, just kind of rolling back into that introduction around profitability and just MusclePharm's game plan and how that is progressing. If you remember from some of those recent pieces of content, MusclePharm did turn an annual profit in 2020. They also had a quarterly profit in the first quarter of 2021. But things kind of shifted for the worst, I guess you could say, this quarter. MusclePharm's gross margins were down 1,470 basis points year over year to 14.6%. And if you're looking at this from like a quarter over quarter sequential basis, that number is pretty similar in terms of what they were down as well. So looking at anything around profitability, cost cutting, you really kind of bucket these things into two areas. The first area is around controllable expenses, and MusclePharm has continued to be diligent in this area. That number has been pretty neutral and coming down over the last 2 years. But on the other side, when we're looking at just like manageable costs, these are things that are kind of outside the control of MusclePharm. You can do your best to kind of manage things, hedge your bets, do what you can do. But ultimately, these are kind of macro things that really, unless you're the largest companies in the world, you don't have all that much control over. So for MusclePharm, this is what really hurt them in terms of their profitability for this quarter, because there was an increase in the input costs around milk proteins that really hurt them, and then also an increased amount of freight costs. So MusclePharm had similar gross margins year over year that they had, or even sequentially on a last quarter, they would have been profitable. They would have had a little over $1 million in quarterly profit, but instead they had a little less than $1 million in a quarterly loss. But unfortunately, here's the bad news. The protein markets, whey protein, milk proteins, are going up and they're continuing to increase. So MusclePharm probably had some inventory or had some agreements in place that for first quarter, they weren't kind of impacted all that much. They were impacted, but not as much as quarter two. Now, quarter three and quarter four arguably are going to be worse from an input cost standpoint, especially with some of the spot rates and things on whey right now. So regardless, you're not going to see any improvements until at least 2022. And then on the freight cost side, those are going to be elevated as well. We're heading into the holiday season. The holiday season already is going to be kind of unprecedented. I hate that word, but it is going to be from a freight and logistics cost, be it from parcels, be it from LTL, FTL, shipping containers. It's going to hit all different ways. It's going to be a multiplier effect in terms of that cost area. And there's really not much for this foreseeable future that's going to change with that. So you're going to have a double whammy with MusclePharm in terms of their margin for the next couple of quarters. So if MusclePharm wants to continue to be profitable, you're either going to have to cut a ton of costs, which to me, looking at the income statement and looking at a bunch of those different kind of reports, it's going to be hard to cut to the level that they need to become profitable unless they really increase their sales number to offset a lot of that. And then when you think about them also entering a new product category, or at least kind of reintroducing a product category for MusclePharm, and this is a ultra competitive market, big players in that market, also a market that needs a ton of promotional activity, you really kind of roll this all up and you think, well, they're going to have to raise more capital. There's not enough cash on the balance sheet for them to not do that. So I would assume there's going to be some type of capital raise or convertible debt, related party debt, or something from Ryan Drexler to bridge them maybe through the first half of 2022. But I want to spend the bulk of the rest of the video on just kind of updating you on that energy drinks project that I just mentioned. In that last MusclePharm piece of content, I introduced the new energy drinks product development that MusclePharm was going through and kind of discussed why I was a little bit bearish on just the overall like product market channel fit. If you wanted to hear those thoughts and you didn't consume that last piece of content, I'm going to pop that one up for you guys right here, and I will also leave the link to that content in the description. But to expand on that information, I'll kind of start first with the sales update. MusclePharm has been able to sign on, before they've had products, 8 multi-state distribution deals. The latest one that they announced was with New Age Beverages, which is based in Colorado. And that distribution agreement could be important for MusclePharm to kind of see if there is some traction in the market, because MusclePharm for about a decade was based in Denver, Colorado. So they have a ton of like brand equity and awareness that stems from that market. So those should be able to get some traction, at least in that geographical region. MusclePharm also announced after its quarterly earnings that it had closed over $1 million to date in pre-orders for its MP Performance Energy products. They also stated that these orders will begin to ship in September of 2021. And MusclePharm went a step further and actually provided a long-term kind of outlook projections for their energy beverage segment, which is going to be made up by both the MP performance side and the FitMiss energy drinks. And they're saying they fully expect that this segment will have $30 million in revenue in 2023. Now, for those that maybe are looking for some type of like relative or comparative standpoint for that $30 million, it's not something you laugh at. It's definitely a attainable goal. It's something that could be reached by MusclePharm. But if you look at maybe some of the most recent kind of high-flying energy drinks that have a similar lineage to MusclePharm, so being like Ghost Energy or from Alani Nu, their energy products, they did over $30 million in the first year that that product was available. Now, if I was putting my own money into either MP Performance or FitMiss, which one would I kind of choose? And far and away, I would choose FitMiss. I think that brand has less legacy, so it can kind of stand for anything. I think an energy drink would work well for FitMiss. I also think that females have been neglected for decades in the energy drinks market. And if you look at a brand like Alani Nu that I just had mentioned, you can see how underserved that market was and how interested they are in the energy drinks category. Though MusclePharm at one time was known for its energy product, from a powdered standpoint with a salt, MusclePharm has let that category leadership die and crushed any product equity. Now, I understand the allure of the energy drinks category for MusclePharm. If you think about it's a US market that is about 3 times the size of the protein RTD market. It's not attached to a commodity and a low margin item like protein, and it has about 2 times the categorical growth rate to protein RTDs. So out of the two that MusclePharm has any authority, I guess, to launch in the market, it makes sense on the surface to launch energy drinks. But all that being said, MusclePharm is a protein-centric brand now, and it really should be focusing on building out and extending the Combat SKU family into a refined product architecture that fits the brand's maturity. If I were them, I'd be really looking at what Nutrabolt did with C4 and how they had the good, better, best product architecture and also playing with a bunch of different formats that met the needs within the particular sales channels that they were putting those products in. Another kind of concern that I have, and it rolls back up to kind of the profitability talk that I had earlier, was that if you're entering a new category that's ultra competitive, you're going to need to kind of spend ahead of your revenue. You're going to need to add a lot of costs to change over the business from being a traditional kind of sports nutrition brand over to a beverage brand. MusclePharm is going to have to add more regional salespeople. They're going to have to add more warehousing capacity. Right now, they really don't have any. And they'll need to build inventory in a lower margin product. Now, energy drinks tend to have somewhere around a 40% gross margin. And yes, that is technically kind of margin accretive to MusclePharm, but that's because MusclePharm is mostly a protein-heavy brand at this time. But if you look at just sports nutrition products as a whole, 40% is pretty low on a gross margin. So comparable to some of the other SKUs that MusclePharm would have to build inventory on, hypothetically, this would be a lower margined inventory build. And then finally, MusclePharm is going to have to start spending again on marketing. Just because MusclePharm has protein at Costco or maybe some other food, drug, mass retailers and people see it, it doesn't mean that the mainstream consumer in a large retail channel gives MusclePharm the authority to be a platform brand and have products across multiple categories. So MusclePharm is going to need to spend from a marketing standpoint on the category and also from like the brand level. They're going to really need to create pull and create velocity off shelf. Yeah, they might be able to get sales into these retailers and push retailers to carry the product based on relationships or whatever, but you need to pull that product off shelf. So CEO Ryan Drexler kind of expanded on some previous commentary that he had on the last earnings conference call, he mentioned around opening a new gym, and this one's going to be located in Las Vegas. He also talked about adding more influencers. They're going to start back up their ambassador program, and the first kind of major from like an influence level is going to be TJ Dillashaw. So back to their UFC roots. But MusclePharm also kind of noted that they are going to get back into a ton of content creation. They're going to leverage their new gym, which is a little bit different than historically MusclePharm has ever done to potentially monetize that gym, not necessarily maybe from a dollars and cents, but just from getting value from a marketing standpoint. This is all kind of new for MusclePharm, so it should be interesting to see how that kind of plays out. And I just want to kind of end on some final thoughts. And while it's pretty obvious that over the years, a bunch of different companies have like kicked the tires on MusclePharm to see if it's something they want to buy and kind of acquire. And they've been doing this even since I was a part of the company a decade ago. To me, a lot of the corporate strategy seems to be pointing to MusclePharm readying themselves for a strategic sale in the near term. I think this beverage play and really kind of pushing a lot of that effort there is to entice potential interested buyers, especially if they can get traction. I don't think MusclePharm has any intention of kind of taking it to the finish line themselves. And by saying this, I don't know anything. I don't have any like insider information. Nothing's confirmed to me or anything like that. That's just my feeling. And being that I've watched a ton of companies in this space for the longest time, and you can kind of see some of the moves, do some strategic game theory and kind of play out some of that stuff and see where somebody's heading, see where somebody's leaning. So just some overall commentary. Don't be taking action or anything on like that. That has just been added for the entertainment aspect of this content. Well, I hope you guys enjoyed this piece of content. If you guys have any questions about MusclePharm specifically or just the sports nutrition category as a whole, please leave a comment on this content or reach out to me on any of my social media accounts.